Welcome back to the channel, guys. I've been talking about the Bitcoin cycle, looking at the low coming in later in 2022, possibly early 2023. So I thought I'd put a video together that encapsulates my thoughts on how I got to this decision. There'll be a few pointers we need to be aware of when it comes to a long-term vision of the market. There's going to be a lot of movement in it, and we're going to have to see how the market progresses along the way. The other thing is we need to understand the difference between a short-term outlook and a longer-term outlook. I know there are still a few of us coming to grips with having two different portfolios that we have to manage, but if we want to be longer-term investors, then the way I look at it is I like to have my longer-term bags and of course my shorter-term bags to make more capital, more profits for those longer term bags. So without further ado, I'll cheers to you hitting that like button with my old cold green tea, and cheers to you with my crypto.com bottle for hitting that subscribe button. Make sure you share this video around. This is one of those videos that we want to come back to, and of course I'll come back to it on the channel and update it as we go. Now I'm going to make everything as simple and clean as possible, even right down to how I set up the chart. This is a white bar chart. I know a lot of people love to see a lot of colored candles everywhere, but I'm trying to make things simple for myself and hopefully for you guys, which is exactly what I do for our members in Patreon as well, which you can find a link to in the top of the description. Now, everything that I look at in this video doesn't necessarily have to happen exactly the way I'm saying it. I'm going to be flexible in my approach because that's what I've learned over a decade investing. Is nothing is going to be exactly as I expect it to be, but I like to use roadmaps to look forward so that I'm not getting too many surprises along the way. And how I do this is just reflecting on what I've seen in history. I like to count how many months we have been doing something for and look at the market sentiment from the periods in the different cycles that we have had. And that's what we're going to go through in the video. I'll look at the possibility of how I could be wrong a little later in the video and a potential price movement that I would think would occur if I was to be wrong, and also for the market to come back and still give us a new low. There are several points which I always consider when it comes to the market structure. The first is the market always wants to find symmetry. They like to balance out, but in between there's often constant flows between the extremes. So we know that. We know the markets go from extreme greed to that extreme fear. But if we flatten that out, we often see a lot of symmetry within the markets. So the wavelengths that we're looking at, they tend to shift. I like to think of it as the tides. I live on the beach, I like going surfing, and I know that the tide doesn't always come up as a high tide at the exact same time every day. It's always shifting slightly. Sometimes they're a little longer, sometimes they're a little shorter, but we know that they do repeat. The low doesn't have to be lower than the current low, but it is going to be a significant low. That's what I'm looking for. I'm not looking for anything that it has to be exact, but I want to have an expectation of what I could expect in the future. It doesn't have to be the exact point. It doesn't have to be lower than the last low, but it has to be significant. As I said, I'm flexible with the time frames. Not too flexible, but flexible enough that I can still factor it into my investing so that I can make money from the markets. These time frames might be considered too long for most, but I have a longer term outlook on the markets, and that's how I've been quite successful in them. So I'm going to continue to use these longer term timeframes, and whatever happens in between, I basically just use that to trade altcoins to make more Bitcoin or more Ethereum. The cycles that I'm using for the roadmap and basically the forecast here are approximately 1 year. As you can see, the shortest is about 13 months and the longest about 20 months. The longer cycle, the 4-year cycle, I'm looking at being the shortest around 47 months, and the longest so far that we've seen is 51 months. Like I said, there's going to be some flexibility in these, and it could change over time. Now, the 4-year cycle does not mean it has to end at a peak. I'm looking at the lows to the next major low. That's it. That's all I'm looking at when it comes to the cycle. Doesn't mean that the bull market is over, the bear market is over, whatever you've got in your minds from those other experiences out there. This is how I'm reading the cycles to give me an idea of where I think a low might be coming in. So let's take a look at these on the chart. So this is my blank chart, and I'm going to throw a whole lot of lines and numbers on here at the moment. So I'm on a monthly, nice clean bar. We can throw color into it, but it's just going to confuse things. I just want to go through and measure up some of these lows, and I'm being a little bit flexible with them here. I get that, and I'm going to be a little bit flexible at the other end to give me a rough idea of where I think this low might come in. So the really interesting thing here is if we just take a step back and we go to the longer cycle, let's look at the 4-year here. 51 bars, major low 2010, the next major low 2015. That gives me 51 months. And then within that 51 months, I go to my smaller cycle. My smaller cycles, I got around 16 months to this low, which is a significant higher low. It doesn't look like much, and some people might disregard it, but I've known from my experience, these higher lows are extremely critical. You can see that we've got a big higher low that formed in November of 2011, and then we had a smaller higher low as well. So this is showing us that the smart money is coming in and buying up whatever the asset is earlier than the masses. And this is where the masses come in at the tops. So we don't want to be these guys here. Unfortunate to them, that's what's happened in 2021 as well. But we want to be getting in somewhere here. It doesn't matter if we're not in at the $2 level. As long as we're in by the $4 or $4.50, there's still massive gains to be had at that point. So within this, these smaller cycles, 16 bars from the major low to the higher low. Then I'm using that low to the next major low, so that's another significant low. That's 17, so that's 17 months. And then from that low to the major low that ended the cycle was about 18 months. So I'm seeing about 3 small cycles within the one major cycle. But if we want to take it back and measure it from this low here, there's our 13. And if we want to use this bar here and bring it right back, that's about 20 bars. So like I was looking at here, the shortest and the longest, 13 to 20 months. So I'm just going to bring those back, and that gives us a better average looking for one of the shorter cycles, 16, 17, and 18. So that's our first one that we're measuring from. Let's move to the next cycle, 47 bars. So that's 47 months from major low to the next major low in 2018, December of 2018. 19 in between, 13 in between here, and then 14 in between the next low to the next low. So actually that's 15. So we're going 15 here. What I'm looking for is I could bring this back to July of 2017 and do the same with this one. And that gives me 11 and 17. But I know that this September period was a very extreme period in the market, which is why I'm using these two. That gives me that sort of average price of 13 and 15. And of course we got the 19 as well. The next range is where we currently are. So this is what I'm looking for to play out for this 4-year cycle. Doesn't mean we go into a 3-year bear market. It doesn't mean that the peak is already done. We're just looking at lows to lows. Currently, the low that we are of where this star is to the December 2018 low is only 37 bars. That's what's telling me that this possibly is not the final low for this period. The ranges in between aren't looking too bad themselves. We have our first one being 15 months. So that was from the December low to the next low of March 2020. We have the low from March 2020 to, you can see here, the low of June of 2021. So that was the major low that we saw last year. There's another 15 bars. And if we're working on 15 again, that's going to bring us out to about September 2022. But that's only 45 weeks. We want to look for something around 47 to 51. Now, of course, the cycle could be shorter. It could be a little longer. Maybe it's 53 weeks. Maybe it is 45. And that brings us into September. But if this is going to be the longer, extended, shorter cycle, because we've seen 15 and 13, and then we see a long 19, we see an 18, 17, 16, maybe we see a 15, 15, and a 19. That will bring us out to about January of 2023. So anywhere in between, I think, is a possibility. We've got 13 bars. That brings us to July of 2022, out to the 21 bars. So we extended a little more. That's going to be March. We bring it to 20 bars. It's going to be February. So there is a pretty big gap there. But the main thing that I'm looking at here, based on this roadmap, is I don't think we have found the final low. Now, what else leads me to think that? Well, I can look at the tops. So this is, again, slightly different. I'm going to look from the low to the top. So these numbers up here. Here is the major low, major top, 37 bars. Next, we go January 2015 to December 2017, 35 bars. So we've had 37 and 35. So this is months, 37 months, 35 months. Where are we now? December 2018 to the current top in November of 2021, 35 months. So that's exactly what happened last time, low to a high. Now, that doesn't mean, again, we go into this huge bearish crypto winter. Maybe we do. I don't know. I'm looking for when the next low comes in, and that's going to tell me what happens next. If we get a much deeper low, then probably we're going to be here for quite some time. If we get a more shallow low that maybe only drops into the mid to high 20s, then I think we'll probably go up a little quicker than that. We could see a peak sometime later in 2023, maybe even into 2024. So what could this look like on the chart? Well, I want to use this particular bull market, the bear market and the bull market range. I'll throw that on with the bar patterns. And because the numbers are so high, it compresses and it's a little bit more difficult to use here. But looking at that, maybe we get something like this where the market trends down, because it is a similar sort of time period here. We're looking at around low to low 18 bars. So we've got it from the top down into some lows that could happen in late in quarter three, quarter four, or quarter one of 2022. Sure, it's a big target area, but that'll get closer. We'll be able to narrow that in the closer we get to that time. The main thing that I'm looking for in my investing is I think we will have some sort of lower periods, and I don't think we're going to rush up to new all-time highs just yet. We could get a test of the low 50,000s, maybe even the high 50,000s, but I think we still have some lower time. And so if that was the case, we got higher in the price, then this next retracement low may be a higher low, which we've looked at already, and the higher lows are still really solid periods for the market to bounce from. We've seen it in all previous cycles. So this could be that next one, and we take off yet again. But I still think we have some sort of major low to come, higher low or a lower low than we currently are. So I'm looking at this as more time within this 4-year cycle to hit us with a new low. And if we get that low and the market starts to take off, then, we could go anywhere into the hundreds of thousands looking at history. But again, the market cap is getting bigger, so I'm not expecting anything absolutely astronomical like $250,000 Bitcoin. That will come in time. But I think the next one is probably going to shoot us somewhere into the low 6 figures. So let's have a look at more details to do with price, but also how could I be wrong with this? I'm pretty set from what I have seen and what I've researched that I think this is going to happen, but I could always be wrong. I think the possibility of that is going to be a lot lower, but I could be wrong. So what would I expect to see if I am wrong? And then we still drop into some sort of 4-year cycle low. We could shoot up from this point. I would expect that the price of Bitcoin probably wouldn't exceed $80,000 to $90,000. We might fall short of $100,000 if that is to happen within approximately the next 6 or so months. So something like where we are now, and we shoot up, there's the 80s and the 90s, and then we come into another higher low or lower low. It doesn't really matter, but I think we'll get some sort of low later this year or early into 2023. So in terms of being wrong, it's still being wrong, but being right at the same time. I still see another low coming in, but the price could shoot to that 80 or 90,000 and then drop us into a new higher low. It's all part of the potential accumulation range, but we won't know that until the market decisively breaks out and takes off from that point. Either way, with what happens, obviously I'm preparing, I'm getting my roadmaps together. I have my exchanges set up if I need to be trading in and out at that point in time. If you are looking for exchanges, check out the links in the top of the description down below. Aussie's best cryptocurrency exchange is SwiftX there. And for internationals, you got Bybit. It's a no KYC exchange, plus up to thousands of dollars of sign-up bonuses. So check that out. Now, in terms of price, let's have a look at that. And I've got a simple 200-week moving average on the chart here. So we've seen it in the past, the market come back down, test the 200-week moving average. I don't often use this in my trading because I'm more focused on Gann analysis and Wyckoff analysis, but something simple that someone new to trading or looking at charts could even flick on is a 1 week or the weekly 200-week moving average. And you can see the market drops back down to this quite often. We may get a spike underneath it. That's not the first time that's happened. 2020 and then also 2015, a spike, and early 2015, 3 times you could see here. But the close has generally been around or on the moving average or just above it. And that's a really good sign. A spike low is generally far more often than not, a pretty good sign of a solid, significant low. The difficulty, especially for new investors, is that it's the most extreme time when the market does get into a spike low. Remember, each of these bars are 1 month. So that's at least 28 to 31 days that you could expect to be in the feel of fear for that period of time. So don't take this too lightly. It's not as simple as just looking at this chart. You're going to have to go through the emotions of the extreme fear in that period and potentially extreme greed that might shake us out as the market moves up before maybe we get this extra low. My take on this is I am expecting some sort of low, late Q3, sometime in Q4, maybe early Q1. Could be a higher low than where we currently are, but it'll be a significant low. And I know it's a big open broad target picture, but I think we'll be able to close that gap. Generally, it's what's always happened is we'll be able to close that, narrow that down the closer we get to that time based on what the market is showing us in terms of structure. If you want to learn more about trading and investing full time, check out our Patreon link in the top of the description, weekly group calls coming up this Monday, and of course, exclusive posts on our cryptocurrency portfolios and real estate portfolios as well. Save this video on your watch lists and make sure you're subscribed so you can stay up to date with our cycle analysis here. Thanks again for watching, liking, and subscribing. See you guys at the next video. Until then, have more fun to get more done.